$438 billion in one quarter. It's sheer panic buying.
Panic? No. It's a calculated land grab. You don't accidentally spend $14.2 billion buying back your own Irish factory.
Oh, come on. Intel doing an equity round trip just screams AI FOMO.
It screams infrastructure. Ecolab just dropped almost $5 billion on data center cooling.
So nobody's doing the math on these mega deals anymore.
Nope. But wait until you hear why Keurig wants to own all the coffee in the world. The rundown. $438 billion in one quarter. I had to refresh my terminal 3 times to make sure it was not a glitch.
Up 155% year over year. And WTW researchers are pointing out we have not seen this many $10 billion mega deals since 2008, which is not exactly a comforting year to be compared to.
Nothing screams healthy market quite like pre-financial crisis volume. But look at what is driving it. It is pure panic buying. Tech executives are opening their checkbooks with reckless abandon because they are terrified of missing the AI wave.
Or they are just buying back their own stuff. Did you see Intel dropping $14.2 billion to buy back a 49% stake in its own Irish fab joint venture?
The corporate equity round trip. A beautiful thing. Some banker out there just bought a third boat off the fees for selling it and then buying it right back.
It is ridiculous, but the AI infrastructure scramble is real. Ecolab just closed on Cool It Systems for $4.75 billion.
See, this is where I call nonsense. Ecolab is a water and hygiene company dropping almost $5 billion on data center cooling just because it has AI in the press release. That is peak bubble behavior.
I completely disagree. Data centers are running so hot with these new GPUs that liquid cooling is the literal bottleneck right now. Ecolab already manages massive industrial water systems. It is actually a brilliant synergy, not just buzzword bingo. Check the margins on server cooling.
Fair. I just get skeptical when everyone suddenly pivots to AI. But fine, let us talk about a deal you can actually drink. Keurig Dr Pepper is taking a massive 96.22% stake in JDE Peet's.
96.22. I love a hyper-specific equity stake.
They are bringing in Rafael Oliveira as CEO to run the whole combined coffee empire.
I'm going to be watching the regulatory filings like a hawk tomorrow to see how they handle that remaining 3.78%. Being a minority shareholder in that structure sounds miserable.
Absolutely. One quick hit before we move on. Arclin just finalized its acquisition of DuPont's Aramids business.
Meaning they now own Kevlar. So if this M&A mega deal bubble bursts, at least someone is selling bulletproof vests.
We might need them. Speaking of surviving the blast zone, we need to talk about how European dealmakers are somehow beating the odds right now. The big one.
$438 billion. I had to refresh the terminal 3 times this morning just to make sure I was reading the first quarter aggregate right.
A 155% jump year over year. And honestly, Maya, it feels like pure unfiltered panic on Wall Street right now.
I prefer the WTW researchers' polite phrasing. They called it an intense race to secure AI capabilities. But yes, panic buying is the accurate translation. 4 of the 6 largest deals this quarter were purely AI infrastructure plays. We are seeing the highest volume of $10 billion plus mega deals since 2008.
Which brings us to the most expensive round-trip ticket in corporate history. Intel opening the checkbook for $14.2 billion to buy back a 49% stake in its own Ireland fab joint venture.
I actually laughed out loud when I read the release. They literally sold this equity stake, realized the AI infrastructure boom requires them to actually own their manufacturing base, and bought it right back. It is a hilarious, brutal destruction of capital efficiency.
Look, I will defend the bankers on this one.
Of course you will. Former banker defends corporate fee machine.
Hear me out. When they structured the original joint venture, capital was tight. Now financing conditions are easing up and the strategic calculus has changed entirely. You cannot be the backbone of the AI revolution if you do not control your own fabs. It is an expensive pivot, sure, but it is the right pivot.
It is reckless abandon, Nate. You do not just oopsie your way into a $14 billion repurchase of your own asset. The footnotes on this financing are going to be a horror show. They paid a massive premium just to fix a short-term balance sheet trick from a few years ago.
Better to overpay for your own fab than miss the AI supercycle completely. The market agrees with me, by the way. European dealmakers outperformed their non-M&A peers by 6 percentage points in the first quarter. The penalty right now is for sitting still, not for overpaying.
Fine, but let us look at an AI deal that actually makes structural sense. Ecolab closing on Coolitz Systems for $4.75 billion.
The data center cooling, guys.
Exactly. This is the ultimate picks and shovels AI play. Everyone is fighting over who can make the fastest silicon chips, but these massive AI server farms run so hot they literally need liquid cooling to avoid melting through the floorboards. Ecolab buying into that infrastructure is infinitely smarter than Intel buying back a factory it already built.
That is a really fair point. Ecolab gets a completely new high-margin growth engine out of the AI boom. Though I still think Intel's move was necessary triage. You just hate it because it makes the historical valuation models look messy.
I hate it because it is sloppy capital allocation disguised as strategic vision. But speaking of massive corporate empires swallowing things whole, we need to talk about what is happening in the global caffeine markets.
Oh man, yes, Keurig Dr Pepper just bought up basically the entire remaining float of JDE Peets. Voices. So WTW just put out this research note claiming the explosion of $10 billion mega deals is driven by easing financing conditions and the AI race. They're saying it's the highest quarterly total since 2008.
I buy the AI race part. I completely reject the financing narrative. Look at the data. Total volume hit 438 billion. That's a 155% jump year over year. You don't get a 155% bump just because debt got a tiny bit cheaper.
It definitely greases the wheels, Maya.
Sure, but the primary catalyst is pure, unadulterated FOMO. Tech executives are terrified of missing the AI boat. They're panic buying and opening their checkbooks with zero discipline.
Okay, harsh but fair. Just look at Intel. They just dropped $14.2 billion to buy back a 49% stake in their own Irish fab joint venture.
Which proves my point perfectly.
Wait, really? You think buying back your own manufacturing plant is AI panic?
Absolutely. It's an incredibly expensive round trip of corporate equity just to ensure they control the infrastructure for the AI boom. They sold a piece, panicked about capacity, and bought it right back.
It's the literal definition of seller's remorse. But you have to admit, the market is actively rewarding this kind of aggression right now. Those same market analysts pointed out that European dealmakers outperformed their peers who stayed on the sidelines by 6 full percentage points in Q1.
6% in a single quarter is statistical noise, Nate. That's not a long-term trend.
Spoken like a true skeptic, but 6% pays out a lot of banker bonuses. I'll take the noise.
Always back to the advisory fees with you.
Hey, I know my roots. Speaking of massive checkbooks and aggressive moves, tomorrow we need to dig into the regulatory filings on Keurig Dr Pepper's 96.22% takeover of JDE Peet's.
Yes, I really want to see exactly how they plan to handle those remaining minority shareholders. Spill the tea.
I just can't get over Intel spending $14.2 billion to buy back a stake in its own Irish fab. It's the most expensive round-trip ticket in corporate history.
They literally sold that 49% stake to Apollo just a couple of years ago to raise cash. Now they're buying it back. I read the press release twice to make sure I wasn't hallucinating.
Classic banker move. Sell low to fix your balance sheet, buy high when the AI FOMO kicks in. You can practically smell the panic in the boardroom. They're terrified of missing the infrastructure wave.
Okay, I'm going to push back on the panic narrative. Yes, AI is a factor, but look at the WTW research. The real catalyst here is easing financing conditions. That's why we just hit $438 billion in Q1. It's a 155% jump year over year.
Maya, 4 of the 6 largest deals this quarter were pure AI plays. You don't drop $14 billion on an Irish fab just because debt got a tiny bit cheaper. This is an absolute arms race. Executives are opening their checkbooks with reckless abandon because if they miss the AI boat, they get fired.
Fine, the AI story sells. But you're ignoring the broader market. European dealmakers actually outperformed their non-M&A peers by 6 percentage points in Q1. That isn't an AI anomaly. That's a structural shift in how deals are getting funded.
I'll concede the European point, but I'm telling you, the mega deal is back because of tech FOMO. It's the highest number of 10 billion plus deals since 2008.
Yes, 2008, which ended so great for everyone.
Exactly. Speaking of massive numbers and potential hangovers, I want to talk about coffee tomorrow.
Oh, you mean Keurig grabbing 96.22% of JDE Peets?
Yes, I'm dying to see the regulatory filings on how they plan to handle those remaining minority shareholders. Tomorrow's radar. Tomorrow, I'm glued to the terminal for Franklin Templeton. They're finally integrating that coin fund spinoff and rolling out Franklin Crypto.
You're way too easily distracted by the shiny crypto object. The real action tomorrow is in coffee.
Seriously, over the blockchain?
Keurig Dr Pepper. They just swallowed 96.22% of JDE Peets. I'm refreshing the SEC page tomorrow morning just to see the filings on how they plan to squeeze out those remaining minority shareholders.
Squeeze out is such a harsh term for a beautiful global consolidation.
That's exactly what you called it when you were pitching these, Nate.
Guilty as charged. Speaking of expensive banker moves, watch Intel. They're dropping $14.2 billion to buy back half of their own Irish fab joint venture. The ultimate corporate equity round trip.
Pure panic buying. Everyone is terrified of missing the AI infrastructure wave. We'll see who else opens their checkbook tomorrow.